Interest rates suck right now. Well, compared to 2020 and 2021. We're in a higher interest rate market compared to those years. But throughout history, we aren't even near the top of where we've seen interest rates in the past. That being said, we have more of an affordability issue in our housing market today, and hopefully some lower rates will help that going forward. And we probably will never see 2 or 3% rates again. Or will we? In today's video, I'm going to show you how to access those rates from the last 3 years to hopefully help with that affordability issue and what is all entailed in what is called an assumable loan. If this is your first time to my channel, thank you for being here. My name is Kadyn Nannini. I'm a loan officer here in Phoenix, Arizona, aka the Millennial Loan Officer. You can find me at my other socials here, all at the handle Millennial Loan Officer, and I'd be happy to connect with you all. If at any point through this video you hear some good information and you want more people to know about it, make sure to hit that subscribe and like button so we're broadcasted out to more people. And then if you want to talk on an assumable loan in more depth, you can always reach out to me and book a call directly on my website, millennialloanofficer.com. Let's get into the video. What is an assumable loan? An assumable loan is where you go to purchase someone's house and you actually just take on their current existing mortgage. You reach out to the servicer of that mortgage and you try to qualify through them. There's no loan officer involved. You actually just go through them to qualify for that loan, and then you take over that loan from the seller. Pretty straightforward. You get their terms, you get their interest rate, what they owe on the house, and everything like that. Most of the time, a seller will say on either the MLS or potentially Redfin or any other third-party service like that, that they have a assumable loan. Especially in this higher interest rate market, it's becoming a more popular thing to talk about. So they will market that they have an assumable loan to potentially start that conversation to see how or if you can take that on. So what loans are assumable? So I can tell you right off the bat, all FHA and VA loans are assumable. Conventional loans, they have to be deemed assumable from the beginning. So you would have to see that that existing loan is assumable. That would be on the listing agent to find that information, and then your agent to potentially reach out and see if that loan is assumable. That being said, you still have to qualify through FHA or VA to be able to qualify for that. Here's the tricky one though. VA loans. Typically, a seller that has a VA loan wants to then give that loan to another member of the military that has eligibility through the VA. Why? Because if they end up giving their loan to a citizen, they actually will lose that part of their eligibility towards the VA. They need another veteran to take on that loan to then free them of that eligibility so they can go find another house. It is doable where a citizen can take over an existing veteran's VA loan, but most of the time they will not want to do that. It's just a little precursor. And to summarize all of this, you are qualifying with that servicer to take over that mortgage and you get their terms. That means you potentially are getting that 2, 3, 4% rate that was around just a year and a half ago. But here's one thing people overlook when it comes to an assumable loan. It sounds great to take over someone's loan and get these great terms and a lower mortgage payment. But you have to remember, when someone's selling their home, they're looking to make money on the sale of their home and their equity they have in that home. So say you're taking over someone's mortgage and they owe $200,000 on that mortgage, but they want to sell the home for $400,000. You, the buyer, have to fill that gap. And that is something that's not talked about with an assumable loan. That is basically a larger down payment than you potentially were expecting to pay of $200,000. That money has to come from somewhere, and it has to come from the buyer. You are covering the gap from if that person, sold it to someone else and they were going to get a loan from the bank. You have to fill that gap of $200,000. Most of the time when people want to take on an assumable loan, they do not have that money to do so. You almost have to buy into lower rates or having that better mortgage compared to what you might get today with interest rates and the balance you might see. Here's a little stat for you if you're potentially looking to use an assumable loan. The average homeowner in Q4 of just last year, 2022, owns $270,000 of equity in their home. So across the board, the average homeowner has $270,000 of equity. So on average, you would have to expect that you'd have to bring $270,000 to fill their equity if they sold their home and you took on their loan. That is straight from core logic, and that is an insane number of that buy-in to potentially get a great assumable loan, but it takes that larger down payment. In a world of affordability issues like I talked about, having $200,000+ worth of money to use as a down payment or to fill that gap for an assumable loan can be very, very difficult and may not be attainable. I'm not trying to be doom and gloom about an assumable loan. I actually want to provide potential options of how you could use it and scenarios of how you could use it in today's market. So let me jump into it. I have two for you. Here's scenario number 1. Someone just bought their house a year or 2 years ago and they have to sell. They have to sell for potentially moving across country for one of their jobs or something like that. That is information you may not always know, but a good realtor will be able to ask those questions and get some answers to understand the full picture of them selling their home. The downside for them for only holding their home for about maybe a year or two is if they relisted and had to pay both agents for the transaction. In this scenario, the seller's worried about losing too much money of having to relist and do everything like that. If you're able to come in and say, I'll just take over your loan, you might be able to help them reduce some of the costs in the sale of that home, and they might be able to walk away more freely. And then you're able to walk in with a lower down payment, better terms, and it's just an overall better situation for everyone. Scenario number 2 is much like scenario number 1. Seller has just a little bit more equity, so it might involve just a little bit more of a down payment than nothing, but it may not be the $200,000. Say you have $20,000 to $30,000 and that's the equity they have in the home. Well, maybe you can just take over their mortgage, fill that gap like we had talked about. It's still a reasonable down payment for a first-time home buyer or any home buyer, and you're able to walk in with those better terms. Basically, what you're looking for is someone who has recently moved. I were you, I'd be looking on Redfin for anyone who recently moved in a year to 2 years ago, seeing what interest rate they might have by talking to the listing agent and what kind of loan they have to see if it is assumable. That is what I'd be looking for to try and take on an assumable loan without having to spend all that $200,000 extra dollars in a down payment that most people don't have. Just like everything in life, there is a pro and con. The pro being you get to walk into a great loan with great terms, into a great home. The con being seller still wants to be paid what the home is worth. So in turn, that may mean that you have to come in with a higher down payment to cover that gap. If you do find yourself in this situation, what I suggest you do is reach out to your trusted loan officer, and they can help guide you through this process to the best of their ability. As always, thank you for watching. But before you go, if you are new here, hit that subscribe button. This won't be my last video, and I would really appreciate any support I can get by hitting that like button. And if there was any useful information, I would really appreciate you sharing this with a friend to get this information out about assumable loans. I will see you in the next video.